Hello, I'm Cyril Vanier. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, heat waves, the war in Ukraine, and export bans on essential staples. The threats to global food supplies are piling up. Will that lead to higher prices and more hunger? Also this week, oil supplies are tightening and prices are creeping higher. Are markets starting to turn in OPEC's favor after a series of production cuts? A lack of fuel, a lack of food, and a lack of money to buy basic goods. Cuba is turning to an old ally, Russia, to help ease its economic crisis. Scorching temperatures ravaged farms from the U.S. to China. Russia quit a deal that allowed the safe passage of Ukrainian grain exports through the Black Sea. And Ukraine says Moscow hit its grain silos and bombed export routes. On top of that, India banned some rice shipments to keep domestic prices in check. Threats to global food supplies are rising once again, and it's feared that they will raise costs and worsen hunger across the world. Fintan Monahan reports on the situation in Lebanon and Chad.
The wheat harvest season is almost over. Farmers say they had little choice but to bolster production because of Lebanon's economic crisis and the rise in global food prices due to the war in Ukraine. But the country is far from producing enough to meet local demand.
In the past, the percentage of farmers who grew wheat was around 40%. Now it's more than 70%. If we get more support, we would be able to grow much more.
It is an expensive business, especially since Lebanon imports almost everything and the local currency lost more than 95% of its value. The nearly bankrupt government has promised to support production by providing seeds at a low price.
We face a lot of challenges to be able to invest in our land. We are poor. We need dollars to buy pesticides. That's why the government should support us.
Lebanon wants to end its dependence on imports, but there's a long way to go. In Chad, the war in Ukraine has also disrupted supply chains and made existing problems even more difficult to manage. Fatima Daoud is replanting her farm after the previous crop failed. It's been weeks since there was any significant rainfall.
The rains were better last year at this time. I fear this could mean poor harvest or worse.
Farmers here say they'll lose more crops if they don't see more rain. But that's not the only problem.
Even when the rains come, we lack the necessary tools to cultivate crops. Seeds are beyond our reach.
With each passing year, the area of cultivated land in Chad shrinks as the effect of climate change becomes more severe. That jeopardizes the jobs of 20 million people. And many are going hungry, with millions suffering from malnutrition, all made worse by disruptions to food supplies from abroad. Fintan Monahan for Counting the Cost.
And joining us now from Cape Town is Peter T. Jacobs. Peter is a research director at the Inclusive Economic Development Division at the Human Sciences Research Council. You're joining us from Cape Town. Peter, it's good to have you on the program. Do you see a scenario where the Ukraine grain deal could be revived? Or do you think the world just needs to adjust now to a reality where it's just harder for Ukraine to export its grain?
Good morning. Yeah, prospects for the grain deal to be revived are really very slim at this point because there have been a lot of other developments in the meanwhile. One of the developments, as you well aware of, is the current second Africa-Russia summit in Moscow, and this will result in, I think, the continuation of or the escalation of transfers of food grains between Russia and Africa or certain African countries and other forms of food support for African countries. The grain deal has always been very controversial, and one of the most controversial aspects of the grain deal, according to recent estimates, has been that there's been a differentiation of the benefits for different countries or different regions of the world from the grain deal. Some estimates suggest that between 60% and 2/3 of the grain exports actually went through the global north into Europe specifically, whereas a small number of countries in the Horn of Africa, for example, have benefited from the grain deal. So there has not been an even distribution of the benefits of the grain deal.
Well, Peter, can I jump in? I wanted to get you to address that, because that is exactly the criticism that Vladimir Putin has leveled at this grain deal. He says, look, this has been a lie all along. It was supposed to help alleviate the suffering and food insecurity of the most vulnerable people, but actually Africa has only been getting a tiny fraction of the grain from Ukraine, Europe getting the lion's share of it. Can you help settle that debate for us?
The positive aspect of the grain deal, and this is a very, very profound estimate, or an important estimate, is that the grain deal has helped to moderate grain prices or cereal prices across the world, to moderate the increases at the producer level of these prices, because it has allowed one of the key bread baskets of the world, both in terms of grain exports, but also in terms of fertilizer exports, it's the Ukraine, to help lower the prices of grain. And the estimates is that they anywhere between roughly 14 and 15% of global prices over the last 3 months have really declined quite substantially in cereal grains as a result of the Black Sea Grain Initiative. Remember, the withdrawal of Russia from the initiative only took place fairly recently. And so the spillover effects for the July prices that we're looking at was basically as a result of the initiative that has been in place for several years. So there's been the positive impacts of the grain deal at the producer level, of producer prices at least, they've outweighed, I think, the uneven distribution from my point of view.
Okay.
But if we had both together, I think it would have been a much bigger benefit. I have mentioned already the background of the current summit that's happening in Moscow, and this summit, I'm sure, is going to continue the distribution of, or distribution arrangement, food distribution arrangements between Moscow and certain African countries. How
Peter,
that's going to pan out, we cannot see at this moment.
Peter, something else I want to put on our viewers' radars. There are other factors that are weighing on food security, food insecurity, as it were, globally. And talk to us about, number one, the India ban on rice exports, and number two, the heat waves that we're seeing, just the weather conditions that are making it harder to grow crops.
At the moment, one of the key benefits that we're getting from the harvesting that's happening in the winter harvesting in the global south has been in Latin America, for example, in Argentina, and these countries where they have been able to export quite a bit of their grains harvested in this particular season. And then in the global north, we now see the extreme effects of global warming and the impact of climate change on food production capacity. The worst scenario, I think, is panning out there. It's not what we historically expected as just pure droughts, but we've always been aware of the importance of large-scale fires, and these fires are really devastating and destroying large numbers of crops across major food-producing regions. The Indian situation is very, very important. Why? Because I think a lot of the arrangements in rice exports in Africa, for instance, South Africa, and in Southern Africa broadly, there's been a heavy dependency on rice exports from India and other countries. Now, since the start of the war, even before the Black Sea Grain Initiative came in, there was a kind of a tendency towards food nationalism, as it was called at the time. And unfortunately, this has resulted in countries, especially countries that have historically had advantages in certain crops, such as rice, India being a case in point, arguing that it is more important to secure the food consumption of our own country rather than, to step in to compensate for the impact of the war in increasing exports. But there have been other factors, I think, that have also worsened the situation at the moment. Two factors specifically. I think there's been a lot of disruptions to global transportation networks, and this is affecting negatively on the transportation of food on a global scale. But a lot of the countries have also been affected by severe difficulties in affording purchases of food or purchases of inputs as a result of inflationary pressures and debt. The global debt situation has made the scenario in a lot of countries extremely adverse and extremely bad.
Peter, as you look at all these threats that are worsening food insecurity around the world, is there something that the international community, in your view, should be doing that it isn't currently doing?
There are initiatives at the United Nations level that I think we have to look at very carefully, and how to strengthen some of those United Nations level initiatives. The United Nations initiatives, they are really about the delivery of sufficient food through the World Food Programme and other agencies to countries in the global south, especially where the situation is extremely severe. If we look at the latest State of Food Insecurity report that just came out and was launched in the beginning of this month, where we've had an addition of 122 million people classified as food or severely food insecure in the last year. And this is an extreme situation. Of course, we know that it is the compounding impact of both the war and still the aftermath of the COVID-19 pandemic. So we've got to have interventions at all levels, virtually at the global level. The key area in the global initiatives, I think, is the UN support for climate interventions that will ensure that the food production capacity of countries become more stabilized. This, I think, will be one of the most important initiatives at the global level that all of us must, rally around and support.
Peter T. Jacobs, thank you so much for your time. Great to talk to you today.
Much appreciated. Take care. Bye-bye.
Keep oil supplies low to keep prices as high as possible. That's been the strategy of the world's biggest oil exporters, who have been cutting output gradually since last year. But there have been concerns about weak demand, inflation, and there's been uncertainty about the global economy. Until recently, markets largely shrugged off the cuts. The OPEC Plus alliance had little luck in pushing oil prices up. Now, though, there are signs that the supply cuts are paying off for them. The world's benchmark, Brent crude oil, surged above $80 a barrel last week for the first time since April, and Goldman Sachs expects prices to rise even further. Early last year, prices rose to more than $130 a barrel after Russia invaded Ukraine. Analysts say Saudi Arabia wants relatively high oil prices to balance its budget and fund an ambitious development program. So, Saudi has been leading the oil production cuts that now amount on paper to nearly 5% of global supply. In October last year, OPEC Plus cut output by 2 million barrels a day, its biggest cut to output since the end of the pandemic. That angered the U.S., which was pushing the group to boost production in order to help ease prices. Several months later, the alliance agreed to slash output again, unexpectedly. The move in April pushed prices up to more than $84 a barrel. But prices soon dipped again, so Saudi Arabia announced a unilateral cut this time to output by another 1 million barrels a day. That began in July. It recently extended that through August. And Russia also announced new curbs on oil exports after much delay. Moscow's crude traded last week above a price cap set by Western nations. Joining us from London is Edward Gardner. Edward is a commodities economist at Capital Economics. So, Edward, oil prices have been rising for 5 weeks consecutively now. What's driving that?
So oil prices have risen from around $75 per barrel at the start of the month to about $84 per barrel today. The reason for the price increase is mostly supply. So the OPEC Plus supply cuts that have gradually taken place since October last year have continued to constrain the market. And we think that constrained supply from OPEC, coupled with stronger demand from China, thanks to its economic reopening and the end to zero COVID, and resilient demand in developed economies such as the US, all contribute to market participants expecting a tighter oil market in the coming months. So from our side, we forecast that the global oil market will be in a deficit in the second half of this year, flipping from a surplus in the first half of the year. And in large part of that, it's due to strong demand in the US of around, at the moment, 20 million barrels per day, which whilst down slightly from last year, is still close to the record high of 21 million barrels per day in the early 2000s. And that's at the time of rising interest rates, with the Federal Reserve raising the interest rate. And China's reopening has led to increased refinery throughput of crude oil. So in June, we had nearly 15 million barrels per day of crude oil being refined in China, which was the second highest on record. So we've got a combination of strong demand, lower supply from OPEC, and some improvement in sentiment contributing to the increased price.
Now, the Saudi production cuts are the most significant that they've been in 5 years. Do you expect that to continue?
Saudi Arabia would rather see the oil price stay fairly steady and have a floor rather than potentially rise too far. So we wouldn't be surprised if Saudi Arabia extended its supply cut into September. But from our market balance estimates, we don't actually think that it's necessary. We do still already expect the oil market to be in a deficit in the second half of the year, which should put a floor on the oil price by itself.
Talk to us a little bit about the specific situation that Russia finds itself in, because Europeans imposed a cap on the price of Russian oil, except that Russian oil is now trading above that cap. So does that mean now we know the conclusion is that didn't work?
It doesn't necessarily mean the price cap didn't work. The fact that Russia's crude oil in Europe can sell for more than $60 per barrel now means that to actually move that crude oil, Russia will have to use non-Western financial services and logistics. And if we really think about what the motive of the price cap was from the very beginning, it was to limit Russia's oil revenues and not necessarily deprive the market of crude oil supply. So in that respect, if we do see Russia continue to move crude oil, even when the crude oil price is above the $60 per barrel cap, what we could see is Russia still having to pay quite high amounts of money to facilitate these non-Western provided movements of its crude oil, and that could cut into its oil revenue whilst still supplying the market with the barrels that is much needed.
Higher oil and gas prices are a major concern for the U.S. President Joe Biden. We know that U.S. presidents, especially when they're going into an election year, they tend to want to keep the price of oil low. Do you think the U.S. has much leverage over this?
Well, so we saw last year that the U.S. depleted its strategic petroleum reserve by an order of magnitude of around 200 million barrels. Now, the SPR still is a significant asset that the US has at its disposal. I think it still contains around 400 to 500 million barrels of crude. So if need be, the US could still deploy crude oil from that reserve if the oil price were to rise to concerningly high levels. But as things stand, that's not really something that has been indicated by the US government. If anything, the US government has talked about starting to replenish its SPR in the coming months. So it would be a bit of a U-turn, really, to start to see talk of the US using its SPR, which is its main asset to calm oil prices if necessary, in the coming months.
Edward, thank you so much for educating us on the ins and outs of the of oil prices. Edward Gardner there from commodities economist at Capital Economics. Thank you very much.
Thank you.
Cuba's economic crisis is among the worst since Fidel Castro's 1959 revolution. Many Cubans are struggling with severe shortages in fuel, food, and medicine. They are leaving the island in record numbers in search of a better life. The government is opening the country to foreign investment to help revive the ailing economy, but it says there is no quick fix to its financial problems. And it's now turning to its old friend Russia to help ease the crisis. Moscow has recently signed several deals with the island, including oil and wheat supply, sugar production, and tourism facilities. As part of the agreement, Cuba has agreed to open its doors to Russian investors and banks. Meanwhile, China has reportedly paid billions of dollars to Cuba in exchange for the right to build a secret spying facility on the island. Cuba's economy grew by nearly 2% last year, but the island nation is producing far fewer food staples than it did a few years ago. Joining us from Barcelona in Spain is Jairo Lugo Ocando, Dean of the College of Communication at the University of Sharia and a Latin America analyst. Sir, what do you blame for this crisis? Is it just the sanctions on Cuba's economy, or is it broader than that?
No, I mean, frankly speaking, it's a system that has been unable to be self-sustainable in terms of food since almost the beginning of the revolution. All the big attempts started by Fidel Castro back in the 1960s and 70s to increase and improve food production failed. And basically, they concentrated on one particular crop, which was sugar, which then they exported to the Soviet bloc at that time, and they got heavily subsidized. That distorted the whole productive agricultural sector in Cuba. So the productive system of Cuba has never been efficient enough to be self-reliable on their own food, and has always been dependable food. The crisis accelerated at the beginning of the 1990s because of the collapse of the Soviet Union, and that stopped the massive subsidies that the Cuban government used to get, and which allowed them to import food. Then during the Obama administration, there was some opening and they started importing food from the United States, and they still do, by the way, but that obviously after Trump came to power stopped. And what we're seeing is a system that is unable to produce in its own the food that its people need.
Now, the government has implemented some changes. It has opened up Cuba's economy to foreign investment to some degree and encouraged small businesses. Are you seeing the impact of that?
Well, it's not enough because it's not only that it's been timid responses to the crisis since 1991, since the what they call the periodo especial, or the special period, which was a very hard period for them at the beginning of the 90s. But it's not only that the policy have been very timid, but they have been erratic. Once they implemented, when Roque was in power, one of their ministers who tried really to modernize the economy, he was basically brought down very quickly by the Castros and ostracized, and who knows, what they did to him afterwards. And anybody who has tried to tell the truth to the leaders and say, this doesn't work, now they're trying again. The current president to do some reform, but again, completely under the control of the state. They open some areas for the private sector, particularly international investment in areas like tourism, but like the Spanish investors has always been in Cuba. But again, it's not enough. They have starting to allow small enterprises to take place, but again, it's just not enough, and people doesn't trust this on the long term. So the investment that Cuba needs to modernize its economy, to be self-sufficient, are not going to come under this regime because of its past history and it's what it showed in terms of policy.
They have turned to China and to Russia for help. Do you think that's going to work?
Well, China is the only one who could help them. But it's not that politically committed to Russia. Of course, the Chinese want a spy base, which they are now developing in Cuba, which is a very highly sophisticated center, which has its radars and high-tech device to listen to the United States, and that the Cubans might get something in return. The Russians are in no position to help anybody. The main help that Cuba got in the past 10, 15 years was from Venezuela, from Hugo Chavez when he was in power. Even today, when Venezuela is in complete dire crisis, where the gas, oil, the petrol that is sold in Venezuela is sold at US dollars in international price, the Cubans are still getting a huge amount of oil from Venezuela. So there's a big political commitment. But Venezuela, again, its economy is in collapse. So their main helper is now nowhere to be seen or to be able to cope with Cuba in the way they used to in the past 10, 15 years. So the situation in the island is very difficult. But again, I will have to say very clear on that. One thing that we need to recognize to the Cuban government is their resilience. They have been in very similar situations in the past, and they've been able to survive.
Jairo Lugo Ocando, thank you so much for all your insights.
Thank you.
And that is our show for this week. Do get in touch with us by tweeting me at Vanier Cyril. Do use the hashtag AJCTC when you do. Or drop us an email, countingthecost@aljazeera.net. That's our address. But there's more for you online at aljazeera.com/CTC. That will take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Cyril Vanier from the whole team here in Doha. Thank you for joining us. The news is next on Al Jazeera.